Alrighty, what's going on, everybody? We're gonna hop into this. Just looking at some levels over here on my top one account. We're going to kind of review what we saw happen over the last trading session. Now, this is really important because it sets the context for where we are opening up today. Now, if you're unfamiliar with what had happened today, well, let's invite you to take a look at the 60-minute chart. So if we go ahead and make this full screen, you can see right here we had quite this session, quite the day. Massive sell-off from the open, and we ultimately are bleeding lower. This is essentially what we want to see happen, right? We wanted to see some sort of blow off top, and we got the short up here. We posted a video on that today. We're live this morning as well. We showed that entire trade, but we're going to break down what I'm seeing kind of develop from that point on. Welcome in. We're looking at the 15-minute. We can see right here we have obviously that gap that we talked about, and now we filled the downside of the gap. So what's important for us to know is if we even, matter of fact, we can take off all our levels and just look at this chart right here. Throw up the 60. We don't need VWAP for this. We can simply see that if we look at our object tree, we have the new week opening gap right here. Now this level is super important for us. We had the rejection above the highs, sell off into the low of the gap. Now the question is, are we going to roll over and see these downside levels, namely 320 to 350. Those are kind of my downside levels of interest for now. We are going to give this some time to obviously develop. We'll check out the 1 minute right here. Yeah, you can see we're having a light retracement off the open. I have one swing position still on. I have a trail that's somewhere up here. My entry's up here, so my trail's like right here. So we're going to give this opportunity that it deserves to roll over and see if that is something that will happen. And from there, we'll just kind of, just chill, hang out, talk about what we see on the charts and go over some things. So first and foremost, let's get some nice chill vibes going on. Top one futures, end of summer sales going on. I got some cool graphics. Let me see. Look at this. Look at this. Check this out. It looks like a little browser right there. That's pretty sick, if you ask me. Alrighty, so you're seeing a push off the open. The question is, what are we going to do with this midpoint of the gap? This is the new week opening gap, of course. We're just simply going to be watching price, and if something sets up, cool. But until then, we're just going to kind of chill. Remember, we did catch that short this morning. We were trailing profit on the top one futures account, which is perfectly fine. We will be watching this to see what happens. Ideally, the thesis is this new week opening gap will now act as some sort of resistance level, and we'll start to resolve lower. So check out ES. We can see ES is notably bearish. SMT massively at the highs, massively. And now we're starting to see this lower high potentially form. You have inversions here. You have order blocks here that were respected. What a great trade on ES. I'll tell you that much. So I like to preface these streams, especially the Asia ones, with just the understanding that it's a chill session. You don't have to go too crazy here. It's easy to do too much, but I want to show you that there are opportunities here. Hang out, talk, mostly review. That's a big part of what I like to do during this session, is just kind of hang out, kind of unwind from the day. For me, it's early in the afternoon, so it's not a big deal. But I know there's a lot of people all over the world that love trading Asia just because of whether, where they live or the time zone or their work schedule. So, we do our best to try to make it entertaining for everybody, and also just to make sure that you guys are leaving with more value than come in with. So what have we done? We've defended this level. We swept out prior day low. We did not close below prior day low. I think that's really important for us to kind of mention right here. A close below prior day low would have really began to change the context and make it extremely bearish. But none of that yet. We still have some time. So yeah, as you can see, still just kind of retracing to the range. If we look at the 1 minute, you can see a bit of an opening drive there. So here's what I like to see with these, especially considering that I would say yesterday or, this morning session kind of set a bias. If you look at the 15, you can see right here, this series of up candles, you had a big push, right? You had a big push that swept out these London highs as well as the high of week. When you close below here, to me, that constitutes a change in state. That's a reversal pattern. We talked about that on stream. We talked about that in the video. But what's important is you can align with a lot of opportunity in here. Even though there's a lot of wicks, the wick tells you there's been a lot of time that transpired there. So if you drop to a lower time frame, you see, you have a lot of opportunity in this range. You have a lot of opportunity here. So you'd see swing, swing, swing. Where do you want to get positioned? Do you want to get in here, order block entry, take the retest? Something like that would be a really easy trade. For me personally, my short was positioned up here at like 625. Yeah, 23, 625 area, based on the inversion of a couple fair value gaps in this area. And I was watching for it to cut through this gap. My target was back into this range, which essentially set it at Asia low, or just the Asia range in general. It wasn't necessarily the low, it was like right here. So I wanted to short from here to about right here. It gave it, but I got wicked out and trailed for about 50% profit. It's a good trade if you ask me. I like that type of setup. But what that brings us into now is understanding that any sort of rally right here is going to be suspect in my opinion. I'm thinking that order flow is bearish. I'm thinking that we are going to trade lower. So any sort of strength off the open right here is really just telling me that might be a good opportunity to potentially consider some sort of trade, right? So if we go ahead and look at multiple time frames right here, you can see, yeah, it's like cool little bearish, or sorry, bullish fair value gap. That's great, whatever. I'd be more inclined to think that this is going to at least struggle to hold, if that, and it could outright fail. So what I'd be looking for, on the contrary, I'd be looking for the next leg down. I'd be looking for maybe that level. So we'll clean up some of this right here. I'd be potentially fading this type of move. So that's kind of my mindset here. I'd be fading this to maybe go 400. Kind of a bigger move. VIX was shooting up though today. I will point that out. Hopefully we don't get the move before we look. Right here you can see VIX volatility index is up. We're up about 5% on this session, which is quite literally the biggest move it's had in quite some time. You have all this just dying. So when VIX starts to rally, that's an indication that there is uncertainty in the market. And well, to be fair, there was a nice sell-off today. Back into an area of support, of course. However, support doesn't have to hold. This new week gap below does not have to hold. Now, what we're seeing here is a slight inversion here. Again, this is a trade I'd be considering. I'd be considering the short right there to look for the downside. You could trade it down to 400. You can even trade it down to 425. But that's my thesis. So we'll be doing a mix of things today, going over, again, just a trade example. We'll be looking at some other markets, kind of doing some broader reviews, sharing my thoughts on upcoming news. We have a lot in the pipeline this week, and I think that will be a good segue for us to kind of talk about. So take a second. Remember, Top 1 Futures, 55% off all summer end of deal sale. Pretty much any account you want. But let's hop into looking at, let's see, where are we at? Let's see. Let's pull up a Forex Factory. So if we look at Forex Factory right here, see what's a good layout. Is there a better layout I can do? This is all right. This works. We can do this one. Basically, here's what we got. If we look at Forex Factory, we have jolts today, it's 10 a.m. We have tomorrow, we have ADP, non-farm employment, GDP. So we have some early news in the morning. And then we have on the afternoon, we have FOMC. So tomorrow morning is going to be a little hectic. It makes for a pretty weird trade today. I wouldn't be so eager to do anything just yet, just because, well, simply put, FOMC kind of calls the shot. So yeah, we have right here. Make this nice and clear for everybody. Let me know if you like these kind of formats. We could do more of this stuff. But yeah, we have ADP, GDP right here, then FOMC in the afternoon. That stuff to me is what's going to matter the most. But hopping into Friday, we could see right here your NFP. So stacked week, it's a stacked week of heavy data. And we'll get back to the important stuff right here. Yeah, we got our VIX, we got our MNQ. Over here on the trading view charts, we can look at ES as well. Take a quick glance. We see ES is leading the weakness with now 2 consecutive days lower on ES. And then when we go to NQ, it is not exactly the same picture just yet, but we are getting pretty close to seeing that. So these are the important things that I'm seeing. But yeah, anywho. Got a different view right now, just kind of playing around with the setups on stream. You can see right here, the 15-minute, it's wicking higher, right? It's tagging into this little fair value gap. We'll go ahead and point this out for you guys. Little fair value gap right there. If we go to the 1 minute, however, this is starting to still look like that good short that we're talking about. I do think this is a decent opportunity for a short. You know, I'd be thinking something like under the break of like this. 60 to 70, we could risk $100. Very interesting idea. We could consider one trade. We'll consider one just for the retest of down here to the prior session low. Contextually, I think it's weak. Obviously, we're kind of playing off the continuation of the prior day sell-off, looking for the move through the lows. This is kind of what you're working with. You have that one bearish candle right there. Then you have this fair value gap. The idea is if it is truly not going to go up, it'll quickly invalidate these and should run through the opening price with relative ease. So that's what I'd be looking at. We'll go ahead and make this nice and clear for everybody again. Here we are back to the OG layout. Keep it nice and simple. So yeah, we have a bullish gap in a bearish decline. The idea is that we could potentially trade lower to see some of this stuff. Not to mention the fact that we do have this gap right here. And we're directly underneath that. We have the 15-minute gap right here as well. These black lines. So we're sweeping out prior structure. That's what a fair value gap is. If you look to the left, this is the fair value gap right here. That's what creates this little gap right here. So we're sweeping out prior structure. If we are going to continue, the downside targets would be pretty simple. It'd be down to prior swing low and then prior session low. So that's an opportunity. It would be a scalp type opportunity. The only thing that would go against a trade like this not working, obviously, is if it never triggers. However, aside from that, it'd be this new week gap low. So if we look right here, the new week opening gap low, we go ahead and label this just so we're all clear on what we're looking at. So it looks like nothing's going to trigger, which is cool. It's cool. All good in the hood. We're just walking through ideas here. So what we saw today was a pretty tremendous price action. I was in the short, caught the short. I'm still in the short from on my live account. So there's that. Basically just the sweep of the prior day high. From prior day high to prior day low. That's how a range is going to work. You fail one extreme, you're likely to run the other side with pretty low resistance. If you look at this run up, it's kind of weak. It's not really that there's not much to it. It's not a lot of actual strength to it. It's kind of thin. Switch to the higher time frame right here. Let me know what you guys think about these different chart layouts. What looks best to you? Tell me what you traded. I know we got people from all over. We got people from every different market that come through these streams. Appreciate every one of you. We're just hanging out, chatting for a bit, reviewing some trades, going over some price action, and ultimately just getting ready for a better tomorrow. That's all you can do in this time. Here we are, we got micro NQ loaded up. We can take a look at some other markets as well. Have no fear, we can look all around. We can see gold. Got some weird prints right here. Not too sure what we're talking about there. But yeah, gold just been in this daily range. We've also had copper seeing some crazy moves lately. Yeah, copper reaching all-time highs. Silver is starting to pick up a little bit. But what we care about really is going to be the index. Well, crude's like not too impressive. Crude had the sell-off from the war scare, and then it's just kind of held. It never rebid. I thought it was going to retest this and possibly go, and it just never did. So yeah, markets in general, you can kind of see how they're interrelated. But we are primarily here on this stream focused on micro NQ, NASDAQ, ES, and I don't trade micro ES. I don't see a point. So this is just our structure that we have, right? We have this bullish gap that's not really doing much for us yet. We have this bearish 15-minute gap. We have this bearish downtrend. We have the sweep of this previous swing high, and we have a sweep of the low. So we do have some stacked defense on both sides, if you really want to think about it that way. Regardless, it's a great week to be a trader. Tons of news on the pipeline. We got FOMC tomorrow. That means on a day like today, especially this session, it means play it cool, play it safe. Stay calm, collected. Don't waste any bullets because there will be more opportunity tomorrow. So here we are getting that bit of a top formation. Take a look at the tick chart. Essentially, what I'd be looking for is any sort of break below 460 to trade for 420. That'd be the trade I'd be looking for if I'm going to take something. Just opening little high formation, sweeps out this prior high, which is the fair value gap, of course. It's the same level. And I'd be looking to trade this back towards the prior session low, and if not, even lower. We do have this swing here at 406. That's just if I decide to add another position, but we are currently short from like the 360 or 324. 624, yeah. We're short from 624 on our live. So we're up here on the sweep. Now the question is, do we get the continuation to roll down to here into tomorrow? Especially with FOMC, I see it as highly reasonable. We do get a big move lower. So this is a trade where you could like go 4 of these or something. You know, something like that. You can try this out. You know, if this is something that makes sense to you, this is a type of trade that I would look to take. The only issue you run into is if this wants to hold right here as support and then it just pushes real aggressively. That's really your only concern with something like this, because obviously you do have the 5-minute gap. But the premise is this: bullish setup should fail if the overarching price action in the near term is bearish. And from what we've seen, yeah, I mean, we haven't really had any sort of relief now. Sure, this could be one, that's fine. But the likelihood of this wanting to roll over, especially after a big push on the open right here, It seems more than reasonable, at least for here. Especially with the VIX spike today, especially with FOMC tomorrow, you could probably get a little bit of a move down to here. Because here's what I would like to see for FOMC, if I'm being honest. I would like to see panic before, so that way we have somewhere to get launched from. If we can sell off ahead of that, we have somewhere to get some pretty good longs from. And I'm not saying anything crazy. I'm just saying like down to here. You know, if we get down to there ahead of the open, that'd be a good spot to be. So here we are looking at this. So your main concern, again, is just going to be this candle right here kind of holding. And then it would just run for the highs, which is fine. You know, this is just like a stab at an idea, kind of proof of concept, talking about what we see in price. But, you know, 10 points, 4 contracts, not really a big deal. Not really going to do much. Yeah, 12 points, whatever. There you go, 1150. So you would look at it this way. You have the bearish fair value gap. We can outline right here. If this is truly weak, it should just want to roll over here. And if not, we'll take a stop at the high. This is your little bull flag, break your highs, stop. I would then be looking at this right here off of the new week opening gap low. We're looking at that price level. I'd want to see it trade through that. See that act as a resistance when it does. So that's my premise. You have this down here that you'd want to see it travel through. And if it does, it could see the next leg easily. You have prior day low right there. But obviously you do have short-term randomness, right? Like this could just want to squeeze a little bit. Maybe some late shorts in there, shake them out. But yeah, tell me what markets are you guys mostly trading? Are you mostly in Forex? You trading futures? You trading prop firms, cash? What are you looking at? What is your main go-to? I find that a lot of people like these after hours type streams, these Asia streams, just because of where they're at in the world. And, you know, it's an easier market for a lot of people to trade than New York in terms of time. So anywho, MNQ, boom. So it looks like it's holding for now. Looks like it's holding to the upside. So we have to be cautious of that. We do have this bullish gap on the 30-second as well, worth noting. We'll see. If we could break the swing low really soon, we'll probably be able to reduce the stop, if anything. We don't need to take a full stop, but give it enough room to work. I would say like pretty much at the highs is done for. I don't need it to sweep above. I don't want you to see it go up here. I want to see it go right here, then push these lows. I think that's a reasonable move. You get that 15-minute kind of inside bar right here, and the next bar should go lower. So we got about 4 minutes till that happens, 4.5. Could break to the upside, sure, but the overall overarching theme to me is bearish. You have a short up here, boom, pull back, boom, lower high, boom. Here's our 5 minute. Okay, cool. We're starting to test our entry point again. We just want to see it kind of push through that opening price. We have the opening price for the day right here. This is the daily open. Go ahead and annotate that for you guys. I want to see this kind of just steamroll lower. A lot more peaceful when you just have the charts up. You don't have to look at any prices, orders, anything like that. So anywhere near the highs, it's just going to stop it. We don't want to see it just kind of bounce here and then go. We want to see actual continuation right now. So I'm going to give it this basically as risk, but I'm in the mindset that it needs to be approaching go time if it's going to work. Welcome in, everybody. We're about to approach the 30-minute mark for the stream, the opening range, if you will, for Asia. We're just toying with the idea of if price is going to want to move through this opening price right here. We do have this 5-minute bullish fair value gap, but we also have this 15-minute bearish gap. Given the context of the overall 15, 60, type timeframes, I'm leaning to the bearish side, given the fact that we did reject the range high and we are now just approaching the new week gap. I think this is an area for it to consolidate a little bit like we're seeing. However, I don't think this is enough for it to want to reverse just yet. So because of that, we're looking for the downside. We're going to see if this wants to trade through the lows and then potentially reach for that point of liquidity right here. So that's the thesis. As always with Asia, it's all about sizing down, giving it room, being very detached from what it is that price is going to do. We think generally it's going to go down, but if it goes near these highs, we don't really care anymore. We're over it. We have 1 minute until that 30-minute candle closes and we get some more information essentially. So we're seeing a move into our entry price rather, right here. The daily opens our next reference to the downside. And then aside from that, we have the prior session low, which will be at 422. So when we go ahead and put this, we'll mark it as prior day low, and we want to see that price will trade through prior day low. So that's what we're looking at. Doing this today, top one futures account, first trade of the day for Asia session, just seeing if this will largely confirm the bias that we already have from the previous session. If not, that's all good. We got 10, 15 seconds till the next candlestick for the 30. Here's your 30. So top wick, right? You got some wick right here. Nothing too crazy, not the best, not the worst. Question is, will we go lower next? End of summer deals are here. Top one futures, check them out. 55% off any account. Code DTA for the best discount as always. So these are instant funded accounts I'm trading with. Primarily will be instant funded. Those are best for anyone who's past evals and they just don't want to go through the process again. Pay a little extra, save yourself some time. But even with that being said, you're talking a couple $100 to get in up. I mean, 150K, $400. That's $100 more than you'd pay with a lot of firms with an eval. And you cut to the chase. So there's a benefit to it, but you trade whatever's best for you. I trade a number of accounts, trade personal cash, trade all of it. So right here, we're starting to see a push towards these highs. This is exactly what we're saying when, if it approaches near these highs, we don't want to be in the trade. We'll happily take the stop. Get a little bit of a bull flag action right there. Inside bar break to the upside possibly. And that'll be it for that. So again, we'll check out some other time frames, check out some other charts, see what we got here. We'll look at some Ethereum, see what's up with Ethereum. It's been on a tear. Nice consolidation right here. I love to see this right under these recent highs. This leads me to believe that the next leg is coming soon. So if you're unfamiliar with Ethereum, I mean, we've been positioned down here. We're positioned where right here as well. So here, and we're holding for something higher. It's a good trade for the Discord. I'm in this. We have a lot of people talk about that as well. Discord's free to join. Link in the description down below. Feel free to come hang out, check out what we do, chat with a lot of us, and yeah, ultimately see what you can learn. Good community guys in there as well. So we'll probably be on stream for about an hour. We're going to let this one work. This will be the only trade we plan on taking today. If this doesn't want to go through the opening price, that's all good. That's all good. We're not too concerned with that. The idea is just to show you what I'm looking at thematically, right? I'm looking for this to be a lower high. And if I were to position, obviously this is the type of trade structure I would use. Now, I'm not too concerned with being right or wrong. That's why the positioning size is relatively small, relatively unimportant. 4 micros, 10 points. You know, it really doesn't do all that much to us. However, for the sake of focus and the sake of paying attention to what we got going on, we'll put on a little feeler, right? So there's 2 options. It'll either be an inside bar break right here to the upside, or we get the fail of this bull flag and you trade lower down to the new week opening gap low, and then to the prior day low just below that. So those are my levels, and we'll see how they play out. Starting to see some movement to the upside right here. So anytime you see this, you have the consecutive lower highs, then you get the high that breaks, market structure shift, and this higher low. This right here to me looks like the market structure shift that will then run for this. Doesn't always happen that way, but that looks like what we're seeing right there. So in a scenario like this, I would almost always anticipate the stop to get pushed unless it immediately starts to invalidate. Yeah, with a move like this, I mean, you're seeing a fair value gap created right here. It's really dicey for the shorts. It's very likely I think this is just going to get pushed. Then the stop gets hit. So give it a couple more minutes and let it do its thing. Take the stop or not. But either way, that's the trade that we're seeing so far. If we do decide to trade above our stop loss, if that's where the price wants to go, we can begin to look where it might head next. And obviously we have this sweep up here. And just below that, we have this fair value gap from 487 to 500. That area would be something I would be interested to see if we retrade to. So if this trade fails right here, I would not be interested in doing anything just yet. I would let it kind of work its way up, you know, prove itself to be weak and then maybe consider. But this is, again, just a feeler. Just kind of chopping it up with you guys, seeing how everyone's doing today. If you guys were in the New York stream, you definitely saw we caught a big trade. Thanks, my boy Cedric. Appreciate you stopping by, hanging out. But yeah, this morning we caught a pretty solid trade, 40 points off the open. Short at 624, basically cover at the under the structure. So that was what we were looking at this morning. Now today we're just kind of chopping up small size, playing with one position. One position to keep the class focused so we can have something to talk about. So yeah, today we'll do 1 hour. We'll stream for an hour, pack that full of questions, whatever Q&A. We'll get into it, trade breakdowns, the whole 9. We got some time. It's a good time to kind of, I like using Asia to reflect on the day. I don't like using it to get too involved in any other trades. So it's like you can pick and stab at some things, but overall, the goal right here is kind of just see how we're opening compared to the session, right? So if we had this big move down, I don't necessarily want to see this thing just ripping off the open. I would want to see it kind of maybe push like we did, give it some time, see if this is going to get faded. And that will help me understand where we're likely to trade overnight. So I live in California, in West Coast time. Market opens for me 6:30. So during London, I have really no idea what's going on because obviously I'm asleep. It's like midnight and stuff like that. So this gives me a little bit of pretext to what might happen. Seeing what happens at the open really does give you a lot of information that you can use moving forward. So if you enjoy these types of tips, if you like these streams, leave a like, let YouTube know that you like this so that it will bring other people who might like this, or so I'm told. So 9-point stop just kind of, needs to just kind of move. It's been holding this black line that we drew out for you guys. This right here was the order block from the 1 minute chart right here. You can see it. That's the level that I was saying, okay, this is going to be problematic. So just a matter of trading through that, trade through the daily open, and then you're good. That's all you need. 15 minute, we want to see this inside bar break. So I'm going to clear it up for you guys. You look right here. We'll go like this. So we need to see this candlestick right here, this 15-minute chart. We need to see this candlestick high or low get broken. Right now it's leaning towards the low, but a second ago it was leaning towards the high. So if we can break through that candlestick low, then we have a good chance to trade towards the swing point. So that's what I'm looking at. Oops. So here we are right now. Still defending that order block. Very important level to keep in mind when you see this stuff. When you see a big move, ignition move like we did off the open, boom, this big push. This black candle is going to be significant because look, it tried to reject this big down bearish candle. It put in a giant top wick. So this thing tried to reject. Therefore, that opening price is going to act as a pivot because they try to sell it here, then they bought it back up past it. This can hold. It's going to be a support level. It's all about positioning, right? Where are things positioned relative to our prices? So we're holding above it, and then push towards the highs, run out that. Very stubborn at this price. Very stubborn. Sometimes you'll notice that it'll be very stubborn at your entry price, and that just goes to show like these are areas that are relevant. Price wouldn't stick around my entry price if it wasn't something significant. So we'll give this trade probably 2-3 minutes tops, and then we'll probably cut it. Just because if it's just going to keep going sideways, all it's doing is building value up here, right? It's just accumulating. Sure, it could break lower, but the natural tendency lately has been for it just to kind of pop. So with that in mind, we'll be considering that option. So I don't mind taking a time stop on this. We'll set a limit for a couple minutes. Keep it in mind. Basically, what I'll do also is any sort of push higher, if it starts to fade, I'll just drag the stop down just to mitigate. Because if we form a wick here and then go lower, I can trail my stop right there. Like, see how we're kind of doing it right there? So take off 0.5 point. Because all I'm doing is mitigating. If I don't think it's going to work, I can either rip it off or I can just let it push. Any type of reversal, jam the stop. So that way, even if it does fail, then we're out of the trade. 614, that's the next newest 5-minute candle. Here we are, still same area, still same area. We'll give some time, about a minute or two, and then we'll cut that. And we'll just hang out for the rest of the stream, go over some things that I'm looking for the rest of the week. FOMC tomorrow, do not forget FOMC in the afternoon press conference. You're gonna wanna wait. You're gonna wanna wait until that transpires. Once the press conference is done, you will see a lot of volatility with the FOMC. That's a very, very, very standardized thing. You can count on that like the sun coming up tomorrow. Volatility always follows what they have to say. There's no ifs, ands, or buts about it. The market is heavily driven by that macro influence of the Federal Reserve, especially with interest rates. And that is a increasingly important topic, especially into this Trump election, this Trump presidency with Jerome Powell being pressured and all that good stuff. So hate to bore you with the details, but the details are ultimately what matter with that kind of thing. So interest rates are going to be the decision ultimately is going to be a massive one. So no action yet. It's not going lower. It's holding this fair value gap. It's holding this order block that we talked about, which is fine. We're looking for a quick rally, then a quick reversal through it. We got in pretty much on this candle, zero follow through, but the stop's tight. And we're only looking to trade back down to here. So as this continues to kind of drift higher, any sort of topping wicks that push lower, all I'm doing is I'm going to just drag the stop. I'm just going to drag the stop because all I'm doing is mitigating. I want to be out of the trade. Like, I'm over the trade. However, I don't necessarily need to exit it right here. I can just keep tightening the stop until it forces me out or somehow the trade works. All I'm doing is reducing risk because I don't like the trade. The longer it takes, the less I like it. People say don't strangle your stop when you're trying to be in a trade. Yeah, 100%. If you want to get taken out of the trade, tighten your stop. You can use that logic if you're trying to reduce risk. So it's just basing right here. So this right here to me looks like it's getting ready to break out. 5 minutes there as well. So the next upside level would be like that 490, 500 area, which, you know, we'll see, right? I'm not interested in trading the upside, but that's just what I'm looking at in terms of structure. So we're really, really, really approaching the end of this kind of deadline for this thing. Move the levels. So we're starting to see this push. All you're going to start to see anytime it will start to sell, it'll wick. So that's what I'm going to be watching right here for this wick, just to kind of push higher. So there, moved it another quarter point. Every time this thing kind of just wiggles, we'll just kind of trail it tighter, and eventually we'll get out of the trade. So there's that. 5 minutes there, 15 minutes. Let's see what we're looking like. Still inside bar on the 15-minute, almost 30 minutes consecutively. It's almost a double inside bar. So this thing's going to break at some point. Just know that. This is what we have right here. Double inside bar structure. Boom, boom. Inside this giant candle right here. So which way are we going to break? It's up to the markets to decide. So let's let this work. Let it just get us out of this trade because obviously it's not giving us the follow through that we wanted. It's held our entry price multiple times. So that's an indication that the trade is just not ready to roll over. It might want to dig higher. It might want to run for some structure up here, which is fine. We'll let it do that. We're not too concerned with what it needs to do. We're just willing to give it a shot when there's an opportunity presented. We looked at the invalidation of this fair value gap right here as a potential to get short, and it just did not follow through. So no harm, no foul. Small stop, 7 points, 4 contracts. Very tiny compared to what it could be. So even on this, if we get one candle lower, I'm going to trail it tighter just because I want to be out of the trade. See, like I'll do 1/4 point because we have that topping tail. So if this candle could close right here and then go lower, I'm going to put it 1/4 point lower again, and then 1/4 point, and then just keep going until I'm out of the trade or the trade's in profit or whatever. Candle close. Let's see, is it going to gap and then just run? Okay, so we're starting to push lower. I'm going to go 1/4 point again. And we're just going to keep mitigating because the trade's not working. New 15-minute candle. Let's see. It looks like we're going to get the break to the upside if I had a bet right here based on these. It is closer to the highs, so it's a safe assumption. Do have that 15-minute gap right there. So kind of a mixed basket, but like the idea is we've reduced the stop by basically 50%. So now we're risking like, I don't even know, like a couple bucks. Yeah, see, even like this, I'm just gonna I'm gonna trail it like 1 tick. Yeah. Yep. Just let it go. I want to be out of this trade. If it doesn't work, just keep tightening until you get out of the trade. That's how you mitigate. The other thing you could do if you're trying to mitigate, technically, the other way you do it is you tighten the target. You see what I mean? So if this happens to, for whatever reason, happens to roll over and start to push towards these levels, you're already in the mindset of getting out of the trade. So, that's another way you can essentially reduce risk because you're tightening your target, your objective. But either way, nice 45-minute stream. Appreciate all you for coming in, hanging out, chatting a bit, going over some levels, talk about the big trade today we got in the morning. If you missed today's morning live stream, feel free to check out the recording. We nailed a pretty solid trade. It was a one and done. Yeah, good question. When did I start trading? I would say I started at least 5 years ago. I can't remember like the exact time right now, but I've traded all through COVID, traded all through Biden, all through Trump. Obviously, we're in Trump markets right now, but yeah, like early COVID, prior to that. Yeah. So here we are. Let's just get the stop right here, please. So you see this inside bar right here. There's your inside bar break. And you broke to the upside. Cool. So now we're done with that. We're pretty much going to wrap up the stream in a couple of minutes. Yeah, see, here's your bullish breakout right here. There you go. You're starting to see that. So what did we do? We tried for the breakdown through this fair value gap. It really held. It was really, really, really strong today. So that's all good. We literally gave back, I don't know, $40 or something. Made 340 this morning, gave back 40 right now. That's all good. The trade just wasn't working. We had tested our entry price multiple times, so it is what it is. But what do we see here is simply just a shallow retracement. That's what I'm looking at for a continuation lower. That's the move I want to see. So we'll leave you guys with that. Thank you guys for tuning in. If you have questions, as always, leave them in the comments. If you enjoy this type of stream, leave a like. Don't forget, check out Top 1 Futures, 55% off any account, instant funded, and so forth. Enjoy the rest of your day. And we'll see you tomorrow. Take care. Till next time. Peace out.